Hello, everyone. I'm Michelle Welsh here with Megan Hornerman, Verdence Capital Advisors Chief Investment Officer, and welcome to Markets with Megan. Good morning, Megan.
Good morning, Michelle.
So, unless you've been living under a rock, you've heard about the debt ceiling and the challenges in reaching that debt ceiling. So what's going on?
Yeah, so it came into the spotlight mostly last week because we thought that a deal was done, and then on Friday, it looks like talks had failed. So President Biden is back from his trip in Asia. He returned yesterday. The talks are going to start again over the next couple days. Everybody is focused on this June X date, meaning that's the day we have to have the deal done before we run out of money, theoretically. I think that the government's going to continue to go with that date to try and keep everybody to the table, but let's just keep in mind that there is some wiggle room there, maybe a tiny bit. And then if you go back and look at 2011, President Barack Obama was able to sign a deal on a Sunday night, and or the deal was agreed on a Sunday night, and he signed it into law on Tuesday. So there is a lot of wiggle room around the first. Not as much as we had before, but there is some wiggle room. There's a lot of questions for us about what is this about? Why are they keep fighting? What are the key topics? And there's really three things, if not four, but I'll just talk about the first three. It is the unfunded or the unused COVID funds. So they want those brought back. The Republicans want to have work requirements for several social programs. And then lastly, the Republicans are asking for a spending cap at last year's levels. So no more government spending above what we spent last year. The one thing that is on everybody's mind is 2011. And back in 2011, we were near default on our debt, and our debt got downgraded. Yes, this feels similar. The thoughts are similar. We're taking it to the 11th hour like we did in 2011. However, there's a couple different things when you look at the performance of the equity market, because that's what most of the investors that we field phone calls from are worried about. The market did fall back in 2011, almost 20%. The US dollar was down about 10%. But there was a very key difference between 2011 and now. In 2011, in order to get the deal done, there was a significant amount of spending cuts for future years placed into that deal. So everybody got worried about economic growth. So we saw a sell-off in the markets that wasn't just because our debt was downgraded and we had this political circus going on in Washington. It was because the austerity measures or the budget cuts were going to cut into economic growth in the future. This debt ceiling deal, they're not asking for these deep cuts. They're just asking for spending not to be increased. We don't think that doesn't mean that we're not going to see more volatility as they keep wrangling back and forth. But the bottom line is a deal will get done. It will go to the very last possible minute. They'll maneuver and do any kind of legal jargon that they can do in order to get it done. I'm not concerned about the debt defaulting. It's just another headwind right now on what we keep piling the headwinds. So it's inflation, the Federal Reserve. We now have banking crisis going on. Any kind of spending cuts or any kind of less government spending is another headwind that we're going to see for economic growth. So we do think it's going to get done. The timing of it, we're not exactly sure. Keep in mind, volatility will stay. But what we also saw in 2011 is that calendar year, the S&P ended up being flat and then went on to rise in the double-digit pace for the years after that.
What can we look forward to? What are the next decisions to be made by government to raise the debt ceiling or not?
Yeah, so right now it's they're back to the drawing board on where they agree, and I don't think that they disagree as far as maybe the media may make it seem. I think they're much closer to a deal, but this is what typically happens in Washington. We've seen this in the Great Financial Crisis. We saw it in 2011. Typically, big deals like this have to fail before they succeed.
Okay, well, thank you for keeping an eye on it for us.
Thanks, Michelle.
If you have any questions, email us at podcast@verdence.com.